Zech, how's it going? Welcome to the check-in.
Good to be back, Evan. Good to see you again.
Good to see you as always. You're an easy man to get hold of compared to others. We're in the same time zone. I suggest something, you say yes, and then it happens. I love that.
To be fair, he gave me a range, so it was much easier to work around. So
Okay, well, so this is the check-in, 20 minutes or so, mostly consisting of a bunch of random questions.
sure.
Before we start out anything, I just want to point out that it's raining incredibly heavily behind me as we speak. I'm going to try and eliminate that noise, but there's a fair chance my audio might be not the best. All right, so before we get into the random questions, Zech, you are a macro investor, and these seem to be crazy days with, signals pointing left and right and up and down. What's your take on where we are currently and where the market's likely to go?
So obviously we're recording this in February. It's been an interesting January. I think but honestly, I have no idea. I had this kind of moment last week where I was really considering my Europe thesis. So my Europe thesis is that, the euro is probably going to not do well and return back to parity and things like that. And there are many reasons we can go over it. But I was evaluating my reasons for that thesis, and it's changed. Like, markets have changed so much in just the last 1 month that I have no freaking clue. I've kind of sold a lot of stuff. I think I have like 30%, 30% cash now. Because man, I have no idea, man. It's a really hard market. There's very few obvious bets at the moment, and I have no idea where it's gonna go.
Yeah, I just had a quick look at your portfolio before this. You're about 20%
Yeah.
in cash. You're heavier in currencies than I remember seeing you before. Currency pairs.
Yeah.
You want to
Yeah,
talk about
it's
that?
just a single thesis. Yeah, sure. It's just a single thesis that I have on the dollar and Swissy, so dollar CHF. But yeah, so that takes up a lot of capital, takes a decent amount of capital. But for that, it's you can sell it anytime. It's not worth anything less than cash. It's slightly leveraged, it's 10 times leverage, and I could just lose I don't know, like 1% or something. But I take it as good as cash because I'm not there to make a lot of money with that position. It's just trying to clip a bit of interest roll.
And
Yeah,
as
should I
you
get into
say,
that?
well, let's talk a little bit more about, you had a very good January and you're
Yeah.
green again in February so far. So that's
Yeah.
all fine. I'm relieved to see when I looked at your profile that, well, it strikes me that your gains are built on slightly more solid ground than others that I've seen that have had a wonderful 2023 so far. What is called the flight to shite. I noticed you weren't. you weren't heavy into all those things that have spiked that were massively beaten down for good reason.
Yeah.
You've still got quite a spread going on, and you've made back what you lost. It now makes your 2022 minus 11 point something look like a small beans. You're already back on top of that. So you're doing very well, and I see your copier graph looks like the graph of the United States national debt. It's just going up and up and up. That's crazy. So you're back in favor.
Yeah.
Well done.
Thank you. I can't attribute it to anything. I don't think it's any skill or timing the market or anything like that. It's just, we just make good bets and we hope for the best. That's all we can do.
Okay, well, all we can do is go over to our random number generator for our set of questions here.
Let's go for it.
First one is 23. What's the most annoying question you get asked by copiers?
Should I open existing trades? Yeah.
Should I copy open trades?
That's the one. They always ask that question, and it's in my FAQ. Generally, I just say yes. And yeah, that's kind of the most annoying question. Because already in the FAQ, man, everybody asks the same question. So
By the way, I should thank you for directing people to some of my stuff, like that video series I did on eToro copy trading basics when those kind of questions are asked. So I'm not trying to plug myself. Let's move on to the next question. Number 11. Oh, well, market outlook for the next 6 months.
Oh my gosh. Okay. I posted this on my wall. You can check it. My base case is we end the year exactly where we started. 0% up, 0% down. That's my base case. I think a lot of people are going to be wrong in a lot of areas. I'm coming around to that Europe is not going to have a terrible, terrible recession. They might have one, but it's not awful. But yeah, other than that, I have no views, man. It's a tough market. Like this year is I think by far one of those which I look out in the market and say, are there any interesting opportunities? Like quite few, man, quite few. So it's a tough year. It's a tough year.
Well, because everything is dependent on whether, we go up as a group or down as a group. And don't you think right now, we're kind of at a point where, as I said, there's lots of conflicting signals, bullish technicals, bearish fundamentals, you could argue.
Right.
And a lot of people are saying, this is it, we're on a knife edge. We're either going to go up from here or it's time for the much vaunted elevator drop.
Right. No, I mean, that's a good point. A lot of people are saying, we're kind of 50-50. But, when I invest, it's looking at different styles, right? Different points of time, different things make sense. So like last year, I think if you look at like merger arbitrage, that spread is kind of obvious. Like when Twitter got bought over, that was like a huge shock to everyone. It was like 20% or whatever. You're talking about very, very large cap. Is that so obvious this year? It's a bit trickier, I think. I hold like Simo as kind of one of those that I think might have merger arbitrage. I was looking at Albertson and things like that, but those just happen to be very, very tricky in this kind of environment because you have to look at the way they're financed, right? If they're financed with debt, then interest rates are going up. Does that deal make any more sense? Then can they kind of divorce nicely? And those bets, like if you look at the nuances of all the different styles, it's a bit harder. Yeah, it's just nothing super, super obvious. Like last year, if you asked me what's like super obvious, I would say oil, it's kind of obvious. We don't have enough oil in the world. Everybody thinks we're going to shut down forever based on last year's demand, but obviously that's not happening. But this year, I mean, it's been surprising, right? Like the obvious trades have gone away. Like it's nothing really obvious. Like last year, China was beaten down like crap. It's obvious that China is not going to remain in that state forever. But this year, now that it's corrected, is China going to go back to all-time highs? Probably not. So where's it going to go? I don't know. I really don't know. It's not so obvious this year.
I did ask you last year what else was obvious, and one of the things you said was wire.
Yeah.
Which has done great. And the other thing you mentioned was the home builder that Robert Merck put you onto. That's also done.
Oh yes, DLDR. Yeah, it's done. Yes, see, those two are perfect examples. They're like obvious bets, and they've done well. But now it's like those bets are not there anymore. So what now?
Have you a mind to close your home builder's position with the way things are going, or you still think it's? I seem to recall you saying something like, even when conditions are going down, this is an example of something that, bucks that trend. Isn't that right?
Yep. Okay, so the way I would look at Builder and Wire, I value slightly differently. So Builder, I'm looking at it more from like, okay, if what happened in 2008 and how, so 2008 is like a catastrophic year for home builders, right? And how long did it take for them to recover the same amount of revenue, same amount of margins, and are they doing better now? So they are doing better now, and it took them 2 years to get back to their previous, revenue rate. So when I look at those numbers and then I built my model around it, I'm like, okay, kind of makes sense, Currently it's trading at like 3 or 4 times PE at the time. And yeah, based on I said they've done a lot of consolidation. They're likely to make more revenue in the future, so that's an obvious trade. But now you're right, it's done well. I've closed like some of the position. It used to be a larger position. I've trimmed that. Same with Wire. I think it was severely undervalued and terribly obvious. I gave it like a 0% growth rate and a 20% discount rate. So that's like those are ridiculous assumptions. Like nobody places those assumptions. And it's still trading at like a 20-30% discount, right? So like, oh, that's so obvious to just buy that. But yeah, they're hard to find. These are really hard to find, man.
Okay, let's have another randomized question. 25. Oh, well, silly question for you, but do you want to be a Black Star PI? Let's do another one. Number one. It's a bit too similar to the one I asked earlier, I think, but I'll ask you anyway. What's the worst thing about being a PI?
I don't know, man. Just like no downsides. Like it's fun. I've got nothing to complain about.
Right. 37. Is there anything you wouldn't invest in on moral grounds?
Oof, that's a tough one. That's an interesting one. Depends on what you mean by moral, and I hate to say the word depends. I would say yes, there are things I wouldn't invest in, like gambling, probably not. Smoking, probably not either. Other than that, the rest of it I'm kind of okay with. Like I wouldn't be averse to investing in defense stocks because I think it's necessary. But yeah, definitely not smoking, not any domestic arms sellers in US that like focus on retail market, probably not. And but also for macro reasons, I don't think like people are smoking less and less these days, right? Unless you go like emerging markets, switching to vaping and stuff like that. Not saying that's good or bad. It's just it's just not a good investment. Neither is gambling. Like, I don't understand gambling. I don't know. I don't invest in like Adidas and Nike or anything like that either. So that's not on moral grounds. I just don't understand it.
23. How long have we been talking for? What's the most in? Oh, no. We've already done 23.
Oh.
28. Describe your last holiday.
Japan last year.
Oh, cool.
It was very cool. Never been to like Japan my entire life, so first time going. Interesting experience. Like I've worked for a Japanese company before, never been to Japan. So I'm feeling the culture out was kind of interesting. I love the food. It's amazing. I love the convenience shops. It's fantastic. The Shinkansen was such an amazing, the bullet train was such an amazing experience. And yeah, it's just super convenient to get around anywhere. It's such an interesting economy. It really opened my eyes to a lot of the things I was thinking about with regards to like macro and they've been printing money all these years, where's the money kind of gone? But they have this like fantastic infrastructure. It's amazing, man. Japan's such an interesting country, and I love the Japanese culture and stuff. I love anime because I'm a nerd. So yeah, I don't know. It was good. It was really, really good. And we did Disneyland, of course, because my wife had to do Disneyland.
You did what, sorry?
Disneyland.
Oh yeah. Okay. Where did you visit? Was it Tokyo, all Tokyo?
No, we did let's see, we did oh my gosh. Okay, Osaka. We did Tokyo, and we did a kind of a cross country thing. Oh gosh, I can't remember. We did Kyoto as well. So yeah, quite a number of cities.
Okay.
All within like 7 days, I think.
Really? Wow.
Yeah.
I mean, I was going to say, isn't it incredibly clean and efficient? But it is. But you live in Singapore, which isn't a million miles away from that.
But it's not close, man. Like, I think Japanese people are just so conscientious about like even litter on the floor. Singapore is clean, like really clean, but Japan is different, man. It's really different.
I remember looking out of my hotel window in Tokyo early morning and seeing, teams of people in immaculately clean uniforms picking up every little scrap off the road, all the rubbish.
Right.
And then they're out sluicing it with water, cleaning it. I mean, the place is sparkling by the time you set foot outside your hotel. The place is just shining clean. Number 13. This can be our last one, I would say.
Okay.
What's the one position in your portfolio you suspect might do the worst?
Okay. Okay. Actually, it's kind of easy. Shiba Inu. I have Shiba Inu.
Yeah, I bought that. It's almost break even, or it's in the green, isn't it? Slightly.
Oh, today it's in the red. Today everything is down, so because of the Binance stuff that's going on. So it's in the red. I have a feeling that may not do too well because it's so volatile compared to the rest of the market. But it's interesting, right? Like Shibarium is coming out, which is the layer 2 of Shiba. It's supposed to come out tomorrow, so we'll see. And that could be an interesting trade. We'll see what happens. But yeah, I don't know. I just kind of like the idea of like people who don't give two craps about how good it looks to just deploy in Shibarium.
Have you plans to increase your crypto allocation in the coming year?
Not at the moment, man. The way the market's going, it's just not a good environment to be in. Like you look at the amount of volume that's traveling around. A lot of VCs I've spoken to are really scaling back. And a lot of market makers are scaling back as well. So there's a lot of liquidity that's being pulled out of the system. So if it goes, I think it's a matter of time before it goes up. It doesn't take a lot for crypto to go up. But I think I'm comfortable where we are now. I don't see a reason to add like significant amount more. And I'm gonna be honest, man, even in like 20, like when I had those like 2 years of fantastic performance, I had like 10% in crypto. It wasn't like 40% or whatever. It's 10% just did so well at the bottom. It's like, yeah.
Well, you're still doing well, Zech, and it wouldn't surprise me if you kept building those copier numbers up throughout the course of the year.
I hope so, man. I mean, all we can do is just make the right choices and hope for the best. That's all we can do.
That's all we can do. Okay.
Yeah, exactly.
Take it easy.
Yeah. Thanks, Gavin, for the catch up.
See ya.